Okay, so we're going to talk about gold, and the theme of today's analysis is to pay attention to entry and how we need double confirmation and why we need double confirmation. Additionally, pay attention to how I use Fibonacci's to pinpoint potential areas of reversal. All right, let's get into it. All right, gold starting on the monthly, looking for our zones. I see some horizontal sell sensitivity. I see some buy sensitivity. So we identify our zones. After identifying our zones, we're now looking for flow. So we see a strong push to the downside. Price is now in consolidation, meaning it's respecting its upper zone with sell pressure. It's respecting its lower zone with buy pressure. So since we're looking at the higher time frame, the monthly chart, and we know that price is in consolidation, it means it's going through its own lower time frame push and exhaustion cycles. We've identified everything we need to identify here on the monthly. Now let's take it down to the weekly. We've taken it down a time frame. What's the first thing we do? That's right, we look to identify area sensitivity. First thing I notice is this mid-range zone. We see sell sensitivity turning into buy sensitivity, back into sell sensitivity. Secondly, we see some respected higher lows, so we identify our uptrend. So before we go ahead and identify our zones, I just want you to notice something. Look at this exhaustion. Price made a push, and price then came back for exhaustion. Now this is a strong exhaustion. There's a lot of buyers in the market. Now for the first time, we're starting to see some sell sensitivity with the pins. That's because we're hitting a Fibonacci area. So let's identify our Fibonacci extension. Okay, so here we identified area sensitivity. We identified our uptrend. We identified that our mid-range zone is sensitivity due to the 61.8% fib, which price is now seeing sell orders due to reaching it's 61.8% Fibonacci, which we know is an area sensitivity. So after identifying area sensitivity, here's what I think about what's going on. Unlike our previous exhaustion that has nice waves, this exhaustion is very bullish. It's moving very strong to the upside without any type of hills or valleys. We know that price is respecting its upper zone. We know that price is respecting its lower zone since it's in a higher time frame consolidation. But there's a strong possibility that price is going to come back for a dip before its potential continuation to the upside, or just a continuation to the downside to test its lower zone once again. So now we're looking for what a potential entry would look like. We're looking to simplify things. So price made a push to the downside. Price is now in exhaustion. We see sell sensitivity due to the fib, which means we may have a potential continuational push to the downside. So we've taken it down another time frame. We're looking to identify area sensitivity. Once again, higher lows, we identify our uptrend. So after identifying area sensitivity, our entry is very simple. This is confirmation one. We do not enter short yet. Price just reached its 61.8% fib. We need to wait for confirmation that there's enough sell orders in the market, which means we're waiting for that push to break our uptrend to the downside. After a push, we wait for exhaustion. Price action confirmation at completion of exhaustion would be confirmation two, and then we're looking short for entry. So a bearish engulfing candle would be price action confirmation. So in simplification, we're waiting for that push, wait for exhaustion, bearish engulfing candle close before entry short. Now there's only two scenarios that would make this trade invalid. If price fails to make this push to the downside and breaks its 61.8% fib to the upside, this trade's invalid because we know that there's not enough sell pressure to move price to the downside. Now the second play that might make this trade invalid is if price makes a push to the downside and comes back for exhaustion but fails to see price action confirmation and continues to the upside. This also means that for confirmation two, there was not enough sell pressure, meaning that there would not be enough energy for price to move to the downside. If in the event price breaks its 61.8% fib and starts playing above that area, this sell order becomes invalid, and then we start looking for a long trade for our retest of our upper zone. All right, so that's it for gold. And to conclude this analysis, what it comes really down to is double confirmation. We need to be sure that there's going to be a transition and a change in direction. So we need to wait for price to break that lower time frame uptrend to the downside. That's a push because it's a significant move. And then what's after a push? That's right, exhaustion. We wait for exhaustion and we're looking for entry at completion of exhaustion. Have a great day, everybody.